Very good morning to you all, and welcome to this webinar. I hope you can all see the screen and the slides. I'm Craig Martin. I'm chairman of Dynam Capital, and I'm joined this morning by my colleague Tan, portfolio manager for Vietnam Holding. Volatile times. We caution that things we say today may turn out to be slightly different in a week's time. But we hope to give you some interesting updates around Vietnam and Vietnam Holding. Next slide. Usual disclaimers and health warnings apply. Next slide. And the next slide. So we released the interim report for Vietnam Holding just a few weeks ago. Seems a lifetime back. And for those of people who are not familiar with Vietnam Holding, we're an award-winning fund listed on the main board of the London Stock Exchange. We reported in those interim reports on the strong continuing outperformance of Vietnam Holding against the index over 1, 3, 5, 10, and 15 years. We reported that we're a fund with the narrowest discount of any of the Vietnamese funds that are listed on the London Stock Exchange. And in fact, earlier this year, we traded at a premium and issued more shares. We're pleased that we won several awards last year in terms of Best Investment Fund. We're also very pleased with the scores we received from the United Nations Principles for Responsible Investing, UNPRI. Received 3 5-star reports, all above 90%. And Tan, Tin, and myself as a team at Dynam, we're delighted to receive the Citywire AAA rating for well over a year now. So in some ways, there's a little bit of quiet before the storm, but today we want to take you through where we see Vietnam at this important moment in time, but also in terms of the outlook going forward. Next slide. We'll talk a little bit about the trade war. No one can escape that we're in the midst of a global trade war now. My colleague Tam will also talk about the equity market. We'll talk about the portfolio. And at the end, I'll moderate any questions and provide answers to the fullest that we're able to do so. Next slide. So this setting, the backdrop is relatively unchanged. You know, it's an opportunity set which is the envy of many. Vietnam, a large, young population, digitally connected. Vietnam's been a very open economy. It's attracted a lot of foreign direct investment over several decades. And Vietnam itself as a country has really transformed. This year, it will have its own Liberation Day. It will celebrate 50 years of reunification on the 30th of April. It's a country that, as I say, has attracted both foreign direct investment, but is also looking to strengthen its domestic infrastructure. And for us as a long-term investor, the key investment themes remain the same. Looking at the industrialization as the economy modernizes, looking at the domestic consumption opportunities as the GDP growth reaches and passes an inflection point that encourages a rapid expansion in the consumption in the economy. Also looking at the urbanization as Vietnam continues to urbanize, but still is relatively low levels of urbanization compared to much of the world, and underpinned by strong digitalization and adoption of technology, and obviously increasingly AI. But as we said, this is somewhat the quiet before the storm, the continuing picture of Vietnam. And just to make sure we're all on the same page, the US retaliatory trade tariffs came into effect 2 days ago. Vietnam was levied at 46%. And China at an eye-watering 104%. And then, of course, yesterday, a pivot and a 90-day pause on Vietnam's retaliatory trade levels, along with the rest of many countries in the world. And China's lifted to an eye-watering 145%. The trade war is a reality. There's a sharp war of words, at least, between the US and China. Chinese authorities describe the US actions as hegemony in the name of reciprocity. Typical bullying were the phrases used by the Chinese authorities, and perhaps less subtly, Vice President J.D. Vance called the Chinese peasants. So clearly we're in a war of words and a war of rhetoric around trade, and let's hope that's all it is for the time being. Vietnam, on the other hand, is being very diplomatic. Sent trade envoys and government leaders for meetings, following on from calls, very good calls made by the General Secretary of Vietnam to Trump, offering zero tariffs on a wide range of imports. And there's a wide range of meetings going on still in the US to talk about US aircraft purchases, agricultural goods, and other deals. So it's very much planes, grains, and automobiles that Vietnam's looking to buy more from the US. And this 90-day window is useful for continuing with that. So it's been a rocky time in Vietnam, as with other emerging markets. And to perhaps use a theme park analogy for those that go to theme parks in the UK, it's like taking your family to Euro Disney or Disneyland and going on It's a Small World after all, that ride. It's a peaceful, globalized world, warm feeling about connectedness and opportunity and trade. And then you go perhaps to a more aggressive ride, Alton Towers, Oblivion or Nemesis, and it's a queasy ride. It's a queasy journey. And that queasiness has been felt in Vietnam as it has around the world. And that queasiness, as Donald Trump called it, has also looked at providing a bit of toxic uncertainty in many of the markets. So we'll give some background to that and discuss a little bit more what to expect. Next slide. I'll hand over now to Tan just to talk a little bit about the macro.
Yeah, thank you, Craig. So just a brief update on the macro condition of Vietnam in the first quarter of this year. Yeah, before we talk about the tariff very recently. So in the from the very beginning of the year, the government of Vietnam has been talking about the higher target for the next area of Vietnam, the next phase of growth of Vietnam for 2-digit GDP growth for the next decade. And for this year, the targets were set at 8%. And broadly, in the first quarter, the whole economy is on the right track to achieve the target of 8% of GDP growth. And a lot of action taken by the government to achieve that, for not only for the short term for this year 8%, but also for the longer term. So in the first quarter, the government have a very clear plan to reduce the bureaucracy in Vietnam, to reduce the numbers of provinces in Vietnam by half. Yeah, very aggressive plan for Vietnam. And there's also a lot of plan and also commitment to transform the economy, and then we call the new version of reform of the economy of Vietnam, including the diversification of the economy, the encouragement for the development of the private sector, and also another phase of reform for the public sector. And of course, the re-emphasis on the public infrastructure expenditure for Vietnam. And this year, the government already target $36 billion, which is a record high number and was up more than 30% compared to last year, which is very high, very ambitious for Vietnam. So it shows that the commitment of the government to achieve the target. Next slide. And key growth driver of the economy was actually on the right track. The manufacturing of Vietnam was already back to the expansion mode already in March, with the PMI more than 50, and the export and import growth of Vietnam back to high growth pattern. Yeah, more than 15% in March on average. Next slide. And the very important growth driver in Vietnam is the domestic consumption. Yes, we already see a very strong recovery of the domestic consumption in the first quarter of this year, more than 10%. And this is also supported by the coming back of international, especially for the tourists from traditional market like Korea, Japan, Chinese, and also Russia. Yeah, now Vietnam is flooded with international tourists in the first quarter of this year. And public investment, as the government already promised. In the first quarter, the public investment disbursement already up more than 13% year on year. And the later target is 36%. It's not just 30% as in the chart. Yeah. Next slide. Yes, and very recently, the U.S. government already announced the tariff on a number of countries, not just Vietnam, but Vietnam is on the spotlight. And I would like to hand it over to Craig to talk more about the tariff and the impact on Vietnam, also the opportunities for Vietnam.
Thanks, Dan. So there are many effects that the tariffs can bring in, obviously globally and in Vietnam. Vietnam has attracted a lot of manufacturing over the last 30 years and exports globally, and exports to the US have risen sharply over the past 5 years. Actually, during Trump 1.0, since that period, those exports have come in significantly. So the announcement of 46% on reciprocal tariffs on Liberation Day had everyone spitting out their pho and banh mi. It was a lot of surprise because the Vietnamese government had actually done a lot of preparatory work. And so these levels of tariff are significant. And even when we go to a 10% global tax on trade, that's significant as well. But just to put in context, one thing to notice is the relative rates. So there's concerns at a 46% level that people might start to move manufacturing to Indonesia, which is 32% tariff level, or India, 26% tariff level. Next slide. So look at the reason for the trade deficit, and we know now that the formula is not about tariff per se, it's about the level of trade deficit, at least as announced on Liberation Day, has been that when Trump first came in his first term, he attacked China aggressively on tariff and on trade. And that accelerated the Made in Vietnam story, or the China Plus One story. And that trade deficit quadrupled since his first term. Vietnam's not doing anything wrong in that. They are a global manufacturer for many, many goods. There was a lot of criticism in more recent years that actually perhaps China was taking advantage of that and exporting goods to Vietnam, and they're being repackaged and then just sent off to the US. Well, it's probably more nuanced than that. And the Vietnamese government for quite some time has been investigating that to make sure there is actually genuine manufacturing and value-added nature that goes on. And that's something that the Vietnamese were in discussion with the US about prior to Liberation Day. But you can see that Vietnam exports a lot of goods of various categories to the US and relatively low level of imports. And actually, investment into Vietnam historically, a low level from the US. It's mainly been from North Asia, from Taiwan and South Korea, and from within ASEAN, through Singapore, and also from China. So part of the discussions that the Vietnamese have been encouraging for many, many months is to level the playing field a little bit, to allow more, to encourage more US investors into Vietnam, to deepen the trading nature on imports of US goods, and even accommodating Trump's organization to invest in golf courses and hotels and that kind of thing, and encouraging US entrepreneurs like Musk to invest more in Starlink in Vietnam. So Vietnam had good efforts to try and level that playing field. And there can be a lot of impacts from retaliatory trade and high levels of trade. There's the first order impacts, but there could be the second order impacts of slowdowns in global demand for goods and services, a US recession. There can be third order impacts around changing strengths of the currency, a weaker US dollar, restructuring of global trade alliances. And there can also be boycotts on US goods and a shift to more inter-Asian trade. So there's pluses and there's minuses. There's the uncertainty and the queasiness continues to a certain extent. And even at a 10% global level on tax, following the 90-day pause, will have an impact clearly on GDP growth globally. And for Vietnam, the government has set out its stall at an 8% growth, as Tan mentioned, and are sticking to it. But with the global uncertainties, that still could be quite hard to achieve. Next slide. So Vietnam's response, as I mentioned in the introduction, is unlike a number of countries. It's not retaliatory or aggressive in what it says. It's been determined, it's been sincere, and it's been very proactive. So Vietnam was aware of the risks of global trade war and was pushing for preparation ahead of Liberation Day in the early months of this year, and even at the end of last year, discussing ways to increase the level of trade and direct investment, signing a number of deals, and being fast and quick to talk to the new president early on into his administration. And then following the shock of Liberation Day, Vietnam was very quick to get on the telephone. Can you imagine all these countries trying to call Trump? And he picked up the phone and spoke to General Secretary To Lam, who had offered to drop the tariffs on many goods to zero, and hoping to build a very friendly, fair level of trade. Also requesting a delay in the imposition of the reciprocal tariffs to adjust and negotiate. But the tariffs came in on Wednesday, and the markets continued to react negatively to that, and Vietnam has been hit quite hard in terms of its stock market. And then we had Thursday's news of the delays and the pause for 90 days for all countries except China. So Vietnam continues to negotiate, and we use these 90 days wisely, I'm sure, to see how it can reduce tariffs on US imports to Vietnam to zero in many cases, buy more US products to reduce at least a little bit the trade surplus, have tight control measures over Chinese transshipment. I can see there's a question about that. The Vietnamese authorities, is it in their interest to make sure that they don't get punished for the exports that they send out to the US and other countries? They are a very open economy. They've got free trade agreements with 17 countries. And each of those agreements has points that need to be examined and monitored very carefully. So Vietnam is taking its responsibility seriously around the badges of trade and the certificate and countries of origin around that. Vietnam is going to seek to formalize a stronger bilateral trade agreement with the US and wants to get a lower rate than the 46% that was announced on Liberation Day, and also perhaps to have that applied across different categories of goods and services. Now, one thing to mention, clearly that relative tariff level that I mentioned, now it's 10% for everyone, at least for 90 days. So there's no comparative advantage of moving out of Vietnam to any one of those other jurisdictions. And likewise, when China is at 145% tariff from the US, which probably is not sustainable, at the margin, that also gives reason to manufacture more in Vietnam. So we are seeing already some people saying, look, in this trade environment, Vietnam's the place I want to be manufacturing. Next slide. So short-term pain globally, and hopefully for Vietnam, midterm and longer-term gain. So the midterm impacts are that exports to the US could still reduce significantly, partly because of uncertainty and weakening demand. Where we end up after 90 days remains to be seen. And so Vietnam's attractiveness for new foreign direct investment could be at some risk because people will judge where they want to put the new factories. It's not going to impact necessarily existing foreign direct investment, but for the new factories and plants. There could be a hit to GDP. It could be as high as 2.5% if we're getting a high level of reciprocal tariff after that 90-day period. And if China lowers its currency in a currency war, then other countries like Vietnam will probably have to lower their currency too. So we could see another 3 to 5% currency depreciation. On average, it's been about 2.5% per annum over the last 30 years, but we could see that widen as well. But on the longer term impact, as we've mentioned, Vietnam seeks a strong bilateral trade agreement with the US. It was seen perhaps as a friendly shore. It wants to still be a friendly shore to the US, although it doesn't want to be subservient to anyone. The shock of the tariffs is just further accelerating, as Tan said, the government's plan to transform the economy and diversify the economy to other markets using its free trade agreements. It's negotiating with the Middle East on exporting Vietnamese products, agricultural products, to the Middle East as well. And looking very closely at the benefits of FDI in each of the provinces and reforming as needed its economy to be as well positioned as it possibly can be. Next slide. I'll hand back to Tan to talk a little bit about the equity market.
Yeah, next slide. Yes, as it's like other global equity markets, the Vietnam equity market is also very volatile in the past few days, especially for the past few weeks, 2 weeks. Yes, and we got the news from the U.S., the news from from China, and the progress of the negotiation between Vietnam and the U.S. Especially, we also look at the negotiation between the U.S. and other trading partners that the U.S. has been negotiating. However, because of as the market is driven by 90% of the retail investors, that's the reason why the panic triggered the sell-off across the market in a few trading sessions. However, in the past few days, with the hope that the progress can bear some fruit in after 90 days, the market recovered strongly, more than 10% as of today. However, even after the rally of after today, the market is still trading at very attractive valuation. VN30, the biggest 30 companies in Vietnam, is now trading at even below 10 times of earnings, which is very cheap. Yes, and is rarely seen in the past 2 decades. Yeah, next slide. Yes, and how we navigate our portfolio to respond to the risk of the tariff, even though we are very positive that the outcome of the negotiation between Vietnam and the US will be positive for Vietnam and for the long term. However, we also take some action like to defend our portfolio. Yes, next slide. For the short term and also how we rebalance the portfolio in the long term. For the long term, we still believe in the key investment theme that Craig already mentioned at the beginning. This is industrialization, urbanization, domestic consumption, and banks. Yes, the pattern of the development of the growth of Vietnam is still intact. We just need the restructure in the short term. Short-term plan is inevitable, but in the long term, we still believe in the story of Vietnam. The key investment theme is still intact. Next slide. Yes, as of the end of March, we still have about 40% in banks, retail, and actually quite lucky. The focus of the portfolio is we've already focused on the domestic consumption and some domestic factors. Only about 5% of the total of the portfolios was directly exposed to the export sectors. This is a pork company, about 5% of the portfolio, and we quickly reduced our portfolio after the announcement. Some other opposition also indirectly exposed to the export sectors, FDI sectors. This is industrial park developers of about 8% of the portfolios. So the total direct exposure to export sectors and FDI sectors of the portfolio is about 12%. And right after the announcement, we defend the portfolio by reduce this position by half and increase our cash position to now, as of today, to about 9% of the portfolio. However, for the long term, we still believe in banks, in domestic consumption, in urbanization, and even in the industrialization theme of Vietnam. Next slide. Yes, as I already mentioned, this is how the portfolio is constructed. as of yesterday. Yeah, so we took very quick action to defend the portfolio. Yeah, and most of the company in our portfolio actually very resilient to the recovery of the market, the equity market. As, for example, for today, most of our position in the portfolio were up 7%, like up to the ceiling. Yeah, and we are already back to outperform the market. Yeah. Next slide. Yes, we are always talking about long term, and when we look at the long term performance of the portfolio, we can see that we outperformed most of the time compared to our peers. In the short term, yes, yeah, we. However, in the short term, as a active portfolio, active fund manager, we also have to respond to the market, like to reduce the risk in the short term and work for the long term. Yeah, I think that's it for the portfolio. And next slide. Yeah, I think I would like to hand over to enter the Q&A session. Yeah.
Yes, thank you, Tan. So I think you've alluded well to our nimbleness, which has been a key part of our driver of our outperformance over a long term against the market and the peers, and probably it's why we've been picking up awards. But we don't rest on our laurels, particularly in these difficult, volatile times. So we'll go to some questions. We've got a number of questions in. First question is about whether Vietnam will need to pivot more to the US and take sides in a trade war. And I think the answer is that Vietnam and other sensible nations in Asia don't take sides. And you have to navigate those two pools very carefully. Vietnam has a strong trade relationship with the US that we've spoken about. Vietnam also has a very strong trade relationship with China. Vietnam shares a border with China. Vietnam doesn't share a border with the US. So the US, it hasn't been a cause of a lot of illegal immigration or pushing fentanyl across the border, but is a friendly shore. You could also look at Vietnam as a strategically located potential ally for the US in Southeast Asia and in the East Asian Sea. But Vietnam's clever and careful not to take sides and welcomes all to the table. There's another question somewhat linked into that, which is President Xi from China is going to be visiting Southeast Asia very soon. This was planned prior to Liberation Day, and likely that we'll meet with Vietnam, and that will be a good meeting. Looking to meet with, I think, also Malaysia and Cambodia and other key parts of Southeast Asia, if that meeting still progresses as planned. So Vietnam is a skilled diplomat. It's been arbitrating and negotiating trade deals with many constituents and many nations. So it does want to have a good relationship with China. It's an important market and an important trading partner. But I don't think Vietnam's going to be taking any sides around that. There's a question around trade and exports to the US and China's colossal tariffs, the eye-watering tariffs, and the partly made goods that flow through Vietnam. So as I said, these are legitimately imported items from from China, manufactured and then exported. China has a large level of raw material export, but it's a two-way trade. Vietnam also exports a lot of agricultural goods and products to China. The question is also, will that develop opportunities for Vietnam's port and airline industry? Yes. There's a lot of inter-Asian trade which comes through the maritime ports of Vietnam, so trade within ASEAN, trade with North Asia. Tan also mentioned that there's a lot of tourism. The airports are groaning, actually. They need to be upgraded faster. There's a lot of tourists coming in from China and North Asia, as well as Southeast Asia into Vietnam. So Vietnam still remains a very open destination. There's a question about flows into the equity market between foreign investors and domestic investors, and has the retail market reacted? So I think Tan mentioned that the stock market in Vietnam, it's quite buoyant. It's about $1 billion a day traded. So it's an active market. That's the second highest in Southeast Asia, I think just after Thailand. But it's very much a retail market. There's about 9 million domestic investors, 100 million people in the population, 9 million stock traders, and that accounts for about 90% of the flow. So most of the reaction that we've seen in the last week is very much domestic reaction to what's happening. Vietnamese are plugged into what's happening on the global scene. So the very sharp drawdowns, we saw that they were domestically driven. Over the last 18 months, in fact, we've seen net outflow of foreign money out of Vietnam and other countries in Southeast Asia, as people have been pulling money into the developed market and perhaps looking to allocate more to the US and following a strong dollar, etc. So some of these things may change over time. So actually, there's less of a foreign impact in terms of selling in the stock market than it's the impacts from the domestic flows and the domestic investors. And then they reacted to positive news over the last couple of days. And as Tan said, the market's up and our fund is up around that. One thing to note that Vietnam still remains a frontier market. In its recent assessment, FTSE Russell made some encouraging noises that Vietnam's been doing a lot to make its market more accessible to foreigners. At the end of this month, we anticipate an upgrade to the physical stock exchange in Vietnam. On the 30th of April, Vietnam celebrates the 50th anniversary of reunification, public holiday, and a public holiday on Labor Day on the 1st of May. Over that weekend, the plan is to turn off the stock market, put in the new software, boot it up again ahead of the trading day that starts on May 2nd. And that creates increased capacity in the system. And also FTSE Russell are looking to see that the removal of some of the barriers, the pre-funding requirements that were removed at the end of last year, have improved the environment for these foreign investors. And so maybe in September, they may be looking to move Vietnam from frontier to secondary emerging. So a long-winded answer to that question, it's domestic market flows currently, but foreigners may well return. And as Tan said, the market's cheap with reasonable levels of growth. There's a question, a very good question. Year to date, we've underperformed the all-share index, whereas on the long term, we've outperformed. The primary element to that has been the reaction of the domestic investors. They've been, prior to Liberation Day, bidding up the price of a number of stocks that we don't actually hold in our portfolio. And the foreigners have been selling those quality stocks that we do hold. So that's led to that temporary underperformance against the index. But on the long term, over 15 years, we've outperformed the index, adding about 5% of alpha or outperformance on an annual basis. There's also a question about the discount. So the fund trades at a discount to NAV. It's the lowest of the three funds. Earlier this year, we had the ability to be at a premium to NAV, and in fact, we're issuing more shares, which was fantastic. We were the first Vietnamese fund to issue more shares and to be trading at a premium in well over a decade, close to 15 years. Now that retreated a little bit as nervousness came into the markets in the last month. And of course, during the volatile trading following Liberation Day, our discount did widen, but I see that it's narrowed back in again. And the board are very active in monitoring the discount. The number of tools, they have daily visibility on the NAV. They obviously want to see and use share buybacks prudently. And historically, we've run several tenders at NAV. And then, of course, last year, we had our first annual redemption window at NAV, and there'll be a second one this September. So people know that they can be assured the board looks after their interests and takes the discount to NAV seriously. And we do hope to get back to parity and hopefully in a premium and can issue shares in the future. There's a question around when we redeploy cash, what stocks are you favoring? So good quality stocks, long-term compounders in our portfolio, as Tan alluded to, and we take advantage of adding back to the portfolio at good levels of valuation. There's a question on, is Vietnam likely to rely on more regional blocs, i.e. ASEAN and other regional groups going forward, rather than bilateral negotiations with China and the US? Well, Vietnam has a strategic partnership level with the US and a preferred trading nation status also with China and several other countries, and these 17 free trade agreements. But ASEAN could become more important in Southeast Asia, and also the Middle East is looking to do more trading within Southeast Asia, and Vietnam's ready to take up that opportunity. There'll be many meetings with several Middle Eastern countries over several months to look at exactly that investment from the Middle East into Vietnam as they diversify from their oil economies, and also take advantage of the goods and the raw materials and the vegetables and products and seafood and aquaculture that Vietnam's well regarded for. There's a question around on diversification. Tan, maybe you can answer that. Talk to the kind of diversification, the nature of the economy and of the trading partners. Just talk a little bit on that.
Yeah, so for the diversification, the US account for about 29% of the total export of Vietnam, and then we have the EU market, the Japan market, Korea, ASEAN, many other markets that we have been trading with them for a long time. So even though the US market has been very important for Vietnam, but the importance of other market, especially for new market that Craig already mentioned, including the Middle East, Australia, India, and even India, yes, have been increasing a lot, and the diversification has been improved a lot for Vietnam. In Vietnam.
Thanks, Tan. A couple of questions also on trade, very interesting questions. One, what would be the effect on the USA if after 90 days, Vietnam is imposed a 46% tariff? Well, I think a pretty grim one for the US. Half of the world's running shoes or sneakers are made in Vietnam. So, your Nikes and your Adidas shoes are going to be more expensive in the US if there's a 46% tariff. A lot of Samsung phones are manufactured in Vietnam. Gym apparel, Lululemon, Uniqlo stuff, it's made in Vietnam. That's going to be more expensive into the US. So I think the US is going to suffer. There's also a question, they say, we mentioned the relative competitiveness of regional countries. Is the government not more concerned about reshoring to the US? So during the last Trump term, the idea of friendly shores and reshoring and onshoring came about. So the US even then looked to onshore more, obviously in terms of its CHIPS Act, in terms of semiconductors and high value electronic components. And then it looked at that stage to nearshoring, so Mexico and potentially Canada, and then friendly shores such as Vietnam. Well, obviously it's destroyed the nearshoring to a certain extent through its aggressive stance on Mexico, on Canada. It has had some success in headline onshoring of Apple and other manufacturers, but I think as everyone has seen, and we're all seeing the memes coming out of China, it's unlikely that the US is going to want to fill factories with Americans assembling Nike trainers and electronic goods. It doesn't make sense to do that for an economy like that, and it's still early for it to do it entirely with robots and AI. So, trade will flow, just probably at lower levels because of these artificial barriers. If at the end of 90 days these reciprocal tariffs are reinstated, or even if we have a flat tax of 10%, that still has an impact around that. But something to look at is, when I mentioned the relative nature, it's on Liberation Day tariffs, it did seem to suggest some countries might be better suited than even Vietnam. But now at 10% global tax, everyone's in the same boat, except for China. And I think that is unsustainable, but that will probably lead to people still trying to export more from Vietnam, perhaps even in the short term. You can imagine in the next 90 days, sensible buyers in the US might well be placing more orders in Vietnam for goods. So we'll keep a close eye on that. There's a question around the index level. I think Tan has if I'm reading that question correctly, Tan has alluded to the fact that the market's cheap compared to its historic norms on the index. And so we think there's, subject to all other aspects, that there is room for some recovery. And we've seen that over the last couple of days to a certain extent in terms of the Vietnam market, and also our fund listed on the London Stock Exchange has recovered some of the ground that it lost in the last few days. Well, I think that most of the questions that I've seen come through the Q&A. If we haven't addressed any of the questions, we will do so. We'll make sure that those are sent out to people that have asked those questions. And a copy of the webinar today and the summary will be made available. So conscious of everyone's time and the value of your time on your Friday morning, I'll suggest we draw the webinar to a close, perhaps with the following concluding remarks: that in Vietnam and the Vietnamese people are a resilient nation. It's 50th anniversary this year in a few weeks of reunification, and a lot of celebrations can be happening in Vietnam around that. People are driven, hardworking, and the country is trying to be proactive and get a fair deal from the US. One of the first countries to reach out, one of the first countries to be acknowledged actually by the US as a great negotiator and great people. Donald Trump said that on the Rose Garden when he launched his Liberation Day. But we look forward to celebrating Vietnam's Liberation Day, the 50th anniversary of reunification at the end of this month. And we look to perhaps cooler scents prevailing, and we'll continue to update people on the performance of our portfolio and that nimbleness that Tan alluded to. And as always, there's plenty of information on our website, vietnamholding.com, and fact sheets are released and updates made. And we also use social media on LinkedIn to provide some timely updates as well. So we do encourage people to connect with us, and we look to stay in touch with our investors and encourage new investors to look at Vietnam Holding as a way to get exposure to what we think is one of the great growth markets in Asia and one of the great macro stories to keep a close eye on, despite the noise and despite the queasiness. So with that, we'd like to close the webinar and wish you all a very good day and a very safe weekend.